please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Good afternoon. Welcome to Halftime Report. It's 12 noon. We're halfway through the trading session, and so far it's been a steady start to the trading session as we speak. Benchmark indices are higher by close to about 0.5%, and the markets now are inching towards that 10,400, 10,450 mark, where the 50 as well as the 100-day moving averages converge. So those will be important levels for the markets to conquer from here on. Nigel, it's been 2 good weeks on the trot. For the last 2 weeks, the markets have closed up with some amount of gains, and it appears that perhaps the market momentum has now turned upwards.
That's right, Rima. Just take a look at it. We're holding with smart gains in today's trading session. Well, as Rima said, in under 10 trading sessions, the Nifty is up 430, 440 points odd. So the low point we saw was on March 23rd, 2018. The market went to around 9,951. And from there, we have seen a good bounce. Just take a look at the action in today's trading session. The 10,300 put, that's the most active. So on the downside, that appears that is writing at around the 10,300 put. That would mean that these writers, they believe that the 10,220 odd level will hold out in the near term, 10,200 around 10,220. But on the upside as well, the 10,500 call, that's very, very active. And that's the most active strike on the call side. That's added close to around 4 lakh shares. The premium over there is at around 70 rupees, telling you that those call writers, they believe they can defend the 10,550 odd mark. As Rima said, the 200 DMA as well as the 100 DMA, they're very, very crucial marks. And on the upside, the 200 DMA really should, on the downside, the 200 DMA should be the one that the bulls will try to protect. On the upside, the bears will try to protect the 100 DMA odd. Well, Rima, only one thing in today's trading session. The Midcap index has come off the high point of the day, and in fact, it's doing a relative underperformance today. You have stocks like Just Dial, Dalmia Bharat, you have PTC. They are down between around 2 to around 3% odd, but otherwise, good trading session. The Nifty, by the way, has moved to the high point of the day, sitting with a gain of nearly around 55, 56 points.
Talk about individual stocks and news coming in. Reliance Infra has bagged orders worth 1,000 crores. Their EPC orders for a nuclear power project. But we've got our entire team standing by, as you can see. So let's kickstart. Malu, it's all about the consumption stocks today. Titan, Jubilant FoodWorks, as well as Godfrey Phillips. Take it away.
Absolutely, you said it there. You know, it's all about the consumption space, Rima. So Titan, over the weekend, they reported their quarterly updates, and this time the management sounded rather upbeat. They said that in the jewelry segment, they've seen growth of mid-teen as far as the revenue is concerned. That compares with 8% that they saw in the previous quarter. Also, keep an eye out on the fact that this mid-teen growth has come without any significant product launch in the jewelry segment. So that is something which is fairly positive. The second thing, the company said their watches segment, that's also done well on the revenue and the profitability front. Going forward, they are looking at more tech-enabled, a plethora of tech-enabled projects or products in FY19, if I was to quote the management. The only problem, the sunglass division, but that doesn't account too much for in their revenues. 55 times is what Titan trades at. We'll keep an eye out on that stock. It's gaining today at a fresh 52-week high. The other one, Pizza Time, that one's at a record high. Jubilant FoodWorks. Remember, it's that time of the year where people expect a lot from the fourth quarter numbers of Jubilant Food. So this time, the same store sales growth expectations, they're anywhere between, say, 23-24% as far as Kotak and CLSA are concerned. The others expecting anywhere between 17 to 19%. But remember, it comes on a favorable base, so we have to watch out for that one. The favorable base being minus 7.5%. The other thing we'll watch out for, Godfrey Phillips. On April 11th, there is a meeting called by the DIPP with regards to considering FDI in the tobacco sector. Remember, earlier they had proposed a total ban on FDI in the tobacco sector, which includes marketing, licensing as well. Currently, manufacturing has FDI allowed in cigarettes. If there is a total ban, negative for Godfrey Phillips. If there is a tweak which increases FDI, that's a positive for Godfrey Phillips.
All right, Mangalam, thanks so much for that. So from Mangalam, let's go across to Sonal. Sonal, tell us, why are you watching Tata Motors today?
Tata Motors reported good set of numbers when it comes to JLR sales in North America, but that did not do well for the overall JLR sales. Now they've reported an 8% decline in the total March JLR sales, which are down by 8% to 83,700 units, and this was because of the weak demand in the UK region. Now the UK sales are down 27% at 23,000 units. All that is still fine. Actually, the management commentary, that is very weak, and the company says that the weaker market condition in the UK and Europe, driven by weaker consumer sentiment, is what hit the sales, and they expect it to continue for a while, and that's why the stock is weak in trade today.
Okay, thank you very much for that. Moving on, we spoke to the Secretary of Financial Services at the India Business Leadership Awards. He said that the current developments in the banking space is learning time for both public as well as private banks.
It seems like there is a move from public sector to the problem shifting to the private sector as well. How concerned are you about that, sir, in specific? I mean, you've got a government nominee on the board of ICICI Bank as well. What do you make of that situation?
See, the entire financial space, the public sector, private sector, both have very important role to play. And more than that, you have NBFCs, you have microfinance, you have financial inclusion. So a whole lot of financial space. I see a very distinct role for both to exist them in a right environment so that you have proper competition. And it's a good time for both. It's a learning time for both.
All right, then let's hop across to Anisha. Anisha, Citi has a view on Cummins?
Well, yes, the stock is coming under pressure today, and Citi has a view, given the underperformance of the stock in the recent time. It has underperformed the key indices by around 30 times, and usually Citi comes out with an upgrade in such a scenario, given the pedigree of the company and the management. They expect the stock to bounce back, but today that is not the case. Now, they are a bit spooked by the, the ROCEs of the business. They mentioned that over the last 7 years, the ROCEs of the business have halved from 35% to around 17% in FY18. They also say that the asset turnover ratio is also halved from around 5 times early in FY11 to around 2.5 times in FY17. And this is not the end of it, because the company continues to invest a lot in capex, and that capex is related not to their core business but also to the working of the group companies or the MNC of the entire group. Remember, the problem with Cummins has been that a lot of their business has moved from their Indian operations to a direct subsidiary of the MNC. That means a lot of revenue has actually flowed from the Indian listed company to the foreign listed MNC. So that remains a pain point for the shareholders as well. And they also question of why the company is investing so much into real estate and not returning cash to the shareholders. Because remember, the management has been telling the shareholders that this might return them a percentage of around 8% return. And the analysts is questioning of why don't they give the money back to the shareholders itself, and surely they will be able to generate much more than the 8% return, and that's the reason all these questions is really keeping that stock a tad bit under pressure today.
Okay, Anisha, thank you very much for that. Moving on to Lemon Tree, which is India's largest hotel chain in the mid-priced hotel sector, has made a decent market debut, a gain of close to about 8.5%. Mangalam joins us for more on that. Mangalam?
Absolutely, Rima. So surprisingly, an up move coming on Lemon Tree, primarily because remember, a lot of the retail as well as the HNI subscribers did not subscribe to the IPO for the same reason that the company was offered at hefty valuations. But despite that, the market mood is fairly sanguine, and the stock is finding some takers with a higher price in today's trading session. Listed at close to 62 rupees, and at current price, the stock trades at around 42 times FY18 EV to EBITDA. While that number is slightly pricey as compared to the other listed peers, the likes of EIH Associate, Kamath, Royal Orchid, as well as Indian Hotels too. But there are a lot of positives going for the company. The first one being, of course, the leading brand in the mid-price segment, as you earlier alluded to as well. The industry dynamics for the hospitality sector is fairly strong. Indian Hotels themselves, they alluded to 62% to 64% jump in the occupancy, and this company enjoys around 70-75% occupancy. They have higher margins than most of the peers. So let's take a look at the cons then. The first one, the IPO was an offer for sale by the existing investors, so no real money going into the company. Their future leg of capex will be funded by debt. They have close to around 900 to 1,000 crores of debt on their books, and going forward at 75% occupancy as well, they turn net profit positive only in FY18. So what kind of operating leverage benefits can they enjoy going forward is something I will be watching out for. But a good company, hefty valuations, but sees a good listing in today's trading session.
Okay, all right. Thanks so much for that, Mangalam. Well, Ekta, coming across to you, you're tracking the Max Group.
Well, yes, I'm tracking the Max India stock, and the stock is off the day's high, but it's still holding with a gain of around 1.5 to 2%. We do understand, and this is report based, that Max India is in talks to buy 47.5% in Max Healthcare from its South African partner, which is Life Healthcare Group. The valuation is anywhere between around $450 million, and that will result in Max India's stake rising to 95% on successful closure of the deal. So positive news, because it is the promoter who has evinced interest to buy the stake out despite a majority holder exiting.
Okay, all right. We have some important details that are flashing for you on the screen. ICICI Bank is clarifying to CNBC TV18 that there's no board meeting that's planned this week. They're saying they made their stance totally clear on March 28th, 2018, and they're standing by that. So, any kind of rumor mongering that, yes, there is a board meeting, no, that's not. Ritu Singh has written to them. They have clarified to us here on CNBC TV18, and we're putting out that clarification. And the stock as well, remember, has recovered a goodish bit from the low point of the day. Now it's moving to the high point of the day. So no board meeting planned this week. That's ICICI Bank's clarification to all its investors, all its viewers as well. We've written to them. They're clarifying that to us. But a quick recap then of all the buzzing stocks we just covered. We have Titan, Jubilant Food, Godfrey Phillips, Tata Motors, ICICI Bank, Cummins, as well as Lemon Tree Hotels. The stock that you should be focusing on is Reliance Communications. Now, we have some details that's coming in there, and it's indicating there could be a bit of a hurdle in terms of, Reliance Communications' entire deleveraging plan. I think we should get those lines up for you, and we'll get our correspondent as well, Ashmit Kumar, who will join in to fill us in with all those details. Rima,
I'll just read out the lines that Ashmit is already telling us. HSBC Daisy has moved the Supreme Court challenging the NCLAT order, which allowed the sale of tower assets. They're seeking a stay on the NCLAT order, which allowed the sale of Reliance Communications tower assets. Remember, last week, towards the end of the week, the Supreme Court gave the green signal for Reliance Communication to sell its tower assets as well as fiber assets to Reliance Jio. Now, one of the minority investors in the tower business is HSBC Daisy. They hold a 4.2% stake in Reliance Infratel, which is Reliance Communications tower business. They had invested close to about 1,100 crore rupees in the tower business. Now, they have alleged mismanagement by Reliance Communications, saying that we were not in the know-how when this deal was struck with Reliance Jio, and we want an exit at fair value, which is why they're trying to scuttle this deal of Reliance Communication tower assets being sold to Reliance Jio. So they are one aggrieved minority party, one minority shareholder, HSBC Daisy, a 4.2% stake with an investment of 1,100 crore rupees. And now we understand they're seeking a stay on the sale of their tower business. This is not good because, as we know, Reliance Communication has debt of 45,000 crore rupees. With the sale of its tower, fiber, spectrum, real estate, they're looking to sell close to about pare down their debt by 25,000 crore rupees. But the crown jewel in that is actually the tower business, because real estate has not picked up. They're just land parcels. They're yet to, fructify and get in a lot of money. So, the key business from where Reliance Communication can pare down their debt will be the tower business. And, it's not the time is running out in a way, but just it's getting prolonged, and that's what's hurting the sentiment today, because the tower assets could get delayed further, or we'll have to see how it goes, but the road ahead has gotten tougher.
Okay, all right, so we'll have to see how this one pans out, but as Rima said, this is likely to delay the entire deleveraging process. So it appears there's a bit of a spoke in the wheel, and that's why, in fact, the stock, remember, last week it had a good run. Now, in fact, it's suddenly moved to the low point of the day. Just get the intraday chart up. It's appearing that it's down only around 1%. But from the high point of the day, it's fallen considerably in today's trading session. So keep your eye out on that one. Appears there's a bit of a delay. We'll try to get in Ashmit as well. The Rima has pretty much, explained us what exactly this means to their entire deleveraging plan. We'll have to find out what exactly happened in terms of this case. Well, we'll move on then. We have Century Plyboards. That's the stock in focus. Remember, it's nearing a 52-week high. The company has written off entire investments in one of its subsidiaries in Indonesia. To discuss that and more, we have Mr. Keshav Bajanka, the ED of the company, who joins us. Hi, Mr. Bajanka. Thanks so much for joining in, Keshav. If you could tell us, how much had you invested in this particular subsidiary? And also, you had said that, in fact, it is a very small part of your net worth. How much is that?
Yes, the total investment in the subsidiary was close to $250,000. It was an exploratory subsidiary where we were looking at alternate sources of timber from Indonesia, and we were looking at setting up a manufacturing unit in Indonesia to take advantage of the cheaper timber that was available there. However, over the course of the past 2 years, the timber prices there have shot up drastically. Also, one piece of timber that we were exploring there, gudgeon, the quality of the timber has not been found suitable to our requirements. So this was a very, very small investment. It was basically exploratory to understand whether this could be a viable market for us. We're not invested in manufacturing there at all. And as we do not see good results, as we do not see a scope going forward, we have written off this investment.
Okay, 250,000. So that's just about 1.6 crore, right? So that's, you know, insignificant. So what about
1.7 crores?
1.7 crore. Okay, fair enough. So you're saying that you were looking at this Indonesia subsidiary, you were exploring this option in order to get timber. So what is the alternate plan now the company has in order to source this timber, which you no longer will get from Indonesia?
It was not exactly sourcing timber. We were thinking about establishing peeling units there and procuring timber locally in Indonesia, peeling it, and then bringing the veneer to India. Now, what we have decided is that we are going to explore Africa aggressively. We have already sent delegations to Africa, and we are on the verge of finalizing an expansion in Africa that should take care of our expansion, and that should take care of the requirements for veneer that we have going forward.
Okay, so you're looking at Africa as the next potential market, right, Keshav?
Yes.
All right. So how fast do you think you can close out these plans? Do you require any fresh money? And what would be the investment in this particular venture that you're looking at?
I see the asset turnover ratio in veneer is close to 1:5. So the investment is not going to be substantial because the turnover that you draw is going to be substantially higher. Having said that, I think the total investment, if we do decide to proceed in Indonesia, is not going to be above a couple of $1 million. And even then, a lot of machinery that we have lying idle in other geographies can be relocated. So the investment can be further reduced.
Okay.
Okay. So when could these plans be up and running?
I think we should be able to execute them within the course of the next 2 quarters. So I think within 6 months, we will have our unit operational.
Okay, and what is the kind of revenues that you're targeting by setting up this expansion in Africa? Say FY19 goes in setting it up and getting it, getting commercial operations. In FY20, what should we expect from this expansion?
You see, these expansions do not directly contribute to revenue. What we are looking at is raw material security, and what we are looking at is a cheaper source of raw material. So, in terms of the current space veneer that we are using, Africa should be able to provide us with an alternate. So, the turnover in itself is not going to be high, but it could definitely affect our EBITDA margin, as it could lead to higher profitability. The timber that is available in Africa is cheaper than the timber that is available in Southeast Asia. So, as such, exploring the opportunity, if we do find the realizations are good, we should be able to increase our EBITDA margins by lowering our cost of production.
Okay, all right. Keshav, quickly before you go, this year revenue growth of around 20 to 25% on the cards with the margin expansion of around 100 basis points. That's what you told us the last time around.
FY19, definitely.
Yes, definitely. 20-25% plus 100 basis points of margin expansion.
Yes.
Okay, all right, Keshav. Thanks so much for stopping by and giving us all those details. All the best for the remainder of this fiscal then. By the way, the ICICI Bank stock that's up for us on the screen, that's moving quite well. It's helped the Nifty as well to move higher. BIST is holding with good gains, but that stock as well has moved higher. And we have Wipro and HUL. Both those two are the other two stocks that have moved higher as we speak. So let's pull up the intraday chart of both those two stocks. But what's not doing too well is Reliance Communications. A bit of a setback coming in for Reliance Communications. Ashmit Kumar joins us on the phone line to run us through all those details. Ashmit, over to you.
So is there a fresh hurdle that has come in the way as far as the RCOM RGO deal is concerned? That is the question being asked essentially because HSBC Daisy, which is an investor in Reliance Infratel, has now moved the apex court. Now, let's keep in mind that they've moved the apex court against the NCLAT order. The NCLAT order was the one that had provided a relief to RCOM in terms of permission to go ahead and to sell its star assets. Now, what's interesting here is that this order by the NCLAT came on the back of a similar order by the apex court, which had provided relief to RCOM in terms of allowing for sale of non-tar assets. So, post the NCLAT order, they were at complete liberty to go ahead with that entire transaction that had been envisioned between the two sides, RCOM and Reliance Jio. Now, HSBC Daisy has moved the apex court although their challenge is limited to the tar assets, but nonetheless this could play a hurdle. They will be seeking a stay of the NCLAT order, which is likely to get mentioned sometime this week, in the course of this week, and we'll have to wait and watch as to the position that the Apex Court takes, because that will, any direction coming from the Apex Court will play a definitive role as far as this transaction is concerned. So clearly all eyes now on HSBC Daisy and their petition in the Apex Court, where they're seeking to challenge the sale of Reliance Communications tar assets. Back to you.
Okay, Ashma, thank you very much for that. Arcom at the low point of the day.